Hi everyone, and welcome to today's video. Today, we're going to be discussing a question that many of us have asked ourselves at some point. Are my finances in order enough to start planning for some luxury purchases? Whether it's a dream vacation, a new car, or some other big-ticket item, it's important to take a step back and assess your financial situation before making any major purchases. Let's dive in. The first step in determining whether your finances are in order enough to start planning for luxury purchases is to take a close look at your current financial situation. Start by calculating your monthly income and expenses. This will give you a good idea of how much money you have left over each month after paying your bills. Next, calculate your debt-to-income ratio. This is the percentage of your monthly income that goes towards paying off debt. Ideally, this ratio should be no more than 36%. If your debt-to-income ratio is higher than that, you may need to focus on paying off debt before making any luxury purchases. Finally, evaluate your emergency fund. This is the money you've set aside to cover unexpected expenses, like car repairs or medical bills. Aim to have at least 3 to 6 months' worth of living expenses saved up in your emergency fund before making any major purchases. Once you've assessed your financial situation, the next step is to set financial goals. What do you want to achieve with your money, both in the short term and long term? What are your priorities? If your goal is to take a dream vacation or make another luxury purchase, determine the cost of that purchase and develop a plan to save for it. Consider setting up a separate savings account specifically for your luxury purchase, and automate your savings by setting up automatic transfers from your checking account. This will help you stay on track and ensure that you're making progress towards your goal. Creating a budget is a crucial step in ensuring that your finances are in order before making any luxury purchases. A budget helps you see exactly where your money is going and identify areas where you can cut back in order to save more. To create a budget, start by tracking your expenses for a month or two. This will give you a good idea of where your money is going each month. Next, identify areas where you can cut back. This might include things like eating out less, canceling subscriptions you don't use, or finding ways to save on your monthly bills. Finally, make a plan for how you'll allocate your money each month. This might include setting aside a certain amount for your luxury purchase, as well as allocating money for bills, savings, and other expenses. Before making luxury purchases, it's important to pay off any outstanding debts that you have. There are several different types of debt, including credit card debt. This is high-interest debt that can quickly spiral out of control if not managed properly. Student loan debt. This type of debt is often seen as good debt, since it can help you increase your earning potential in the long run, but it still needs to be paid off. Car loans. If you have a car loan, you need to factor in the monthly payments when creating your budget. Mortgages. Your monthly mortgage payments will likely be your largest expense, so it's important to factor this in when assessing your financial situation. Strategies for paying off debt. Snowball method. This strategy involves paying off your smallest debts first and then using the momentum to tackle larger debts. This can help you build confidence as you see progress quickly. Avalanche method. This strategy involves paying off your debts with the highest interest rates first. This can help you save money in the long run since you'll be paying less interest overall. Balance transfer. This involves transferring high-interest debt to a credit card with a lower interest rate. This can help you save money on interest, but be sure to read the fine print and watch out for balance transfer fees. The benefits of paying off debt before making luxury purchases. Financial freedom. Once you've paid off your debts, you'll have more disposable income to spend on luxury purchases without worrying about the added burden of debt. Reduced stress. Debt can be a major source of stress and anxiety, and paying it off can help you feel more in control of your financial situation. Improved credit score. Paying off your debts can help improve your credit score, which can lead to better interest rates and more favorable loan terms in the future. In conclusion, paying off your debts should be a top priority before making luxury purchases. It's important to assess your financial situation, develop a plan for paying off debt, and choose a strategy that works best for you. By paying off your debts, you'll enjoy the benefits of financial freedom, reduced stress, and improved credit scores. Your credit score is an important factor that lenders use to determine your creditworthiness when you apply for loans, credit cards, or mortgages. A good credit score can help you qualify for lower interest rates and better loan terms, which can save you money over time. On the other hand, a low credit score can make it harder for you to get approved for credit and result in higher interest rates and fees. You can check your credit score for free from several sources, including credit reporting agencies such as Experian, Equifax, and TransUnion, or through online credit monitoring services. It's important to check your credit score regularly and look for any errors or discrepancies that could be negatively affecting your score. If your credit score is low, there are several things you can do to improve it, including paying your bills on time. Late payments can have a significant negative impact on your credit score. Make sure to pay your bills on time each month. Paying down debt. High levels of debt can also lower your credit score. Work on paying down your debt and keeping your credit utilization ratio, the amount of credit you're using compared to your credit limit, below 30%. Limiting new credit applications. Too many credit applications can also hurt your credit score, so try to limit the number of new credit applications you make. Keeping old credit accounts open. The length of your credit history is also a factor in your credit score, so try to keep your old credit accounts open and active. When considering making luxury purchases, it's important to think about potential future expenses that may arise. This could include unexpected medical bills, car repairs, or other emergency expenses that could impact your ability to pay for your luxury purchase. Another important factor to consider is your long-term financial goals, such as saving for retirement or buying a house. If you're using a significant portion of your income to make luxury purchases, it may be harder to achieve your long-term financial goals. Finally, it's important to consider the opportunity cost of making luxury purchases. Every dollar you spend on a luxury purchase is a dollar you can't use for other things, such as saving for retirement, paying off debt, or investing in your future. Before making luxury purchases, it's important to assess your financial situation, set financial goals, create a budget, pay off debt, evaluate your credit score, and consider other factors such as potential future expenses and the opportunity cost of making luxury purchases. While it can be tempting to make luxury purchases, it's important to prioritize your financial goals and make sure you're making smart financial decisions. By taking the time to evaluate your finances and make a plan, you can enjoy luxury purchases without compromising your long-term financial stability. If you found this video helpful, please like and subscribe for more financial tips and advice. Thank you for watching this video on assessing your finances before making luxury purchases.